Hi, everyone. Today we're going to talk about there's rate hikes that just happened. And, for a long time, I've been saying Powell is just going to keep raising rates until he breaks something. At first, I started pointing out how dangerous this was. That was like 8 months ago. And then I started saying that they need to slow this down. And then I knew like 6 months ago that if this was just going to go on until he breaks something. Well, he already broke something, and then he raised rates again. And so this rate rise that he's going through, this is what caused the Silicon Valley Bank failure, and the Silvergate, I think it was a different story. That was cryptos, but that's very interesting. It looks like it's another way of just targeting and weakening the crypto market before they introduce a CBDC. And we're going to talk about the de-dollarization that is going on right now around the globe. And I've got a mystery guest with me today to talk about all of these things. So, Dan, do you want to say anything before we introduce the mystery guest?
Yeah, I think, did you want to talk about the rate hikes first? I'll just bring up the Zero Hedge article. I think would be the easiest way to do that. So yeah, rate hikes.
Well, the rate hikes, this is another, oops, I've got the wrong screen up. So it's another 25 basis point rate hike. But we've already been through the fastest rate hikes in history. And I've pointed out that when, Powell is trying to do a Paul Volcker, but the Fed is completely trapped and there is just nothing that they can do. Basically, we're screwed. They've put the entire economy into a corner and themselves into a corner by keeping rates too low and causing the biggest hyper bubbles in real estate and the stock markets and the bond market in history. There's never been anything approaching this, while at the same time, our politicians keep on spending us into a hole that raised the debt to GDP levels over 125%. Now, when Volcker raised rates back in 1979, 1980, 82, that range, when he slammed rates up suddenly, that all happened in a debt environment of 31% to 33%, depending on the years you pick, of debt to GDP. So raising rates didn't cause this huge increase in the interest payments that we make every year on the national debt. But this time around, each small rate increase, now there are basically every weekday, there are basically two treasury auctions where they roll over all of the debt. The old treasury bills, notes, and bonds come due. And so they have to do a refinance, just like a refi on our house. This is a national refinance that happens every single day at a rate to where they roll over the entire debt every 5.25 years, I think it is now. It used to be like 4.75 years. And so in having to refinance the debt every single day, when they're refinancing, when the Fed funds rate was 0.1, it wasn't much at all. But with it now, we are going to be between 4.5 and 4.75, I think was the range in this article that it was talking about. And that is a dramatic balance. In the amount that we were paying was projected to be about $600 billion per year before Powell started this. Now that is going to be going up to it's already 850 billion, but that's as of the projections from the quarter ending September 30th of October 30th of last year, October 1st. So September 30th, the fiscal year. We don't have October, November, December in yet for that interest payment, what that would expected to be. So it's already over $1 trillion a year that we are spending on interest, and it's just going to keep on going higher because we are getting close. We're right at the 1 year period now in this rate hike cycle. Most of those refinances that we've been doing are at 1.5%, 2.5%, 3.5%. And Now we're going to be up at 4.75. So yeah, 4.75 to 5% is where they think that they may stop raising rates. But it means that we're going to have $1.5 trillion. I don't know what it is. I could try and project these things out, but it's going to be huge. $1.5 trillion, maybe even a couple $1 trillion of interest payments per year, a couple years out into the future. So this is a trap. The Fed can't do this without breaking the United States, the budget of the United States. They can't do this without breaking the economy. And that is the only way that they can get inflation under control, is to break the economy. So they are dead set on a path to breaking the United States economy. And that probably means more banking crises, because as I showed in the last couple of videos, or maybe that was the Wealthion presentation, there are 50 banks that are in worse condition than Silicon Valley Bank. And there are 500 banks where their balance sheet is in as bad or worse condition, but they've got their interest rate exposure hedged. So there's out of those 500 banks, 50 of them, though, are in this worst condition. So it'd be actually 450 of those bad balance sheet banks that do have their interest rate exposure hedged. So they won't be the first ones that will fall with the continued rate hikes. But expect more bad news in the future. And with that, I think that I want to bring on our mystery guest. Is that fine with you, Dan?
Yeah, just I didn't mention this before we started, Mike, but we were actually handed some top secret footage from the Fed, which showed how they came to the decision for the bailouts with Silvergate and stuff like that. So I'm just going to cue that up for you, because it's pretty interesting.
Excellent.
And with that, we'll bring in our mystery guest. And here he is. Hopefully his mic's working.
Hey,
yes.
And Jeff Clark. How are you doing, Jeff?
Oh, great. Great, Mike. It's great to be back with you. I've really missed you. And I guess we both have been busy with books, but yeah, I've missed working with you. So it's great to be back on here with you.
Yeah, you came out with Pay Dirt just before I came out with Great Gold and Silver Rush. So yeah. How's Pay Dirt doing?
Doing okay. I think sales are probably affected by sentiment, a little bit.
Yeah. Well,
but I'm just and I don't have a physical book yet, so I'm working with Amazon now to do that. But it's basically an ebook or a digital download right now. So,
boy, I'll tell you, dealing with Amazon, they have punished us every single day for this is a business model where you are an
That's not what I want to hear, Mike.
And so you've got your customers that are the retail customers that do the buying. But if you're an intermediary, you've got another customer, and that is the seller. I'm basically a customer of Amazon because I'd like to sell through them. So I sign up for their service. So I'm a customer on that end. This book was ready to go in November. It didn't get launched until the end of February, simply because Amazon just punished us. They hit us over the head with a stick every single day, suspending our account over and over again, making it so that we can't ship to them. They accidentally weighed 2 boxes at once, twice. And so we ship 100 identical boxes, and they say 2 of them weighed exactly twice the weight of one. And it was over the limits for their handlers, which, I can see that the reason they've got those limits is to prevent injury. But it caused them to shut down our account, meaning Prime goes away, meaning the cost of the book goes up close to $50, hurting sales, hurting our customers, anybody that did pay, the shipping on the book. And we could, and meanwhile, my cost when I'm using the outside fulfillment house is $16 a book to ship, pick, pack, and ship every book. And then now, just 3 days ago, they converted my book to a video game. So if you're
I
searching
saw that.
for my book as a book, it doesn't come up. But if you search for it as a video game, it does. And we have been working every day, multiple times per day, to try and get this corrected. And we get these stupid answers like, this has been escalated to their experts. We've reviewed your suggestions and are unable to accept the suggested category browse node change for my ASN number such and such. This product is assigned to the current category based on the detail page and how Amazon customers find products through search and browse. And this is like now the 5th time that we've told them, no, it's a book. And they say, no, video game is the right way to have it listed. It's a book.
Well, the real video game, Mike, in my opinion, is what the Fed is doing, right? And how investors are having to try to respond to it. Right.
So if anybody's out there looking for the book and it says video game, it's a book. It's not a video game. So the next thing up here is, we've got back in 2009, I started giving presentations on the death of the global dollar standard. And I've been watching since then all of these things falling in place. And they keep on. And one of the things about something like this is pressure builds up for a long time. It's just like S-curve technology adoption. Starts off with the current technology and a new technology, and then it just suddenly makes a transition. It speeds up. And I think what we've been seeing in the past couple of years with the weaponization of the dollar, the way we have been using it as a weapon, is now causing countries around the world to actively seek a way around the US dollar. And they're doing this every day. They're trying to figure out, how do we stop using dollars? And since more dollars actually reside outside the US than inside the US, this is dangerous. And it's been a great privilege that we have had since 1941, being the world's reserve currency. We've abused this privilege. And once it goes away, there's no getting it back. And our standards of living will all fall if it does go away. So so Xi Jinping, the president of China, says there are changes going on now that haven't happened for 100 years, and we are moving these changes together. I don't have my glasses on. And Putin says, I agree. Xi Jinping says, take care of yourself, please, dear friend. And Putin says, happy road. Got any comments on that and how it might affect gold in the future? Jeff?
Wow, I had not seen that, Mike. That's very interesting. That's real. That's not a made up, that's not a meme.
No. And at the same time, well, not at the same time, a little earlier, I've got a RT article, 25th of February. So this was almost a month old. But Iraq opts out of Iraq opts for yuan settlement in trade with China, and they are now doing direct deals using the Chinese yuan instead of the US dollar as a go-between. And so that has finally been set up. And I mean, it's just there. And I think this is one of the things that's going to cause eventually gold to just soar to the moon.
And then because it's part of the monetary reset, right? It's
yes,
the monetary reset is in part, the US dollar no longer being king, no longer being the reserve currency of the world. And if that happens, man, I mean, the world may not end, but it's going to feel like it. And people are going to wish they owned a lot more gold. I bought 3 ounces of gold just like 2 or 3 weeks ago, Mike, when a lot of this stuff started coming out and the CBDC news kind of was making headlines. So, I have a meaningful amount already and I still bought more gold. So,
I wish I could buy gold, but the gold silver ratio just won't.
Yeah. How did I know that was coming?
Yeah. When it's this high, I can only buy, I just can't allow myself to buy gold. I only buy silver. When it's down, if it's between 50 and 70, I'm buying a mixture, and below 50, I buy only gold.
Yeah.
And so I let it be my guide. But,
Jeff, you mentioned that, you were sort of saying this is real. It's actually a real thing. It is a real thing. And I would add that they don't say things like that outside the building with cameras rolling for nothing. It's that was said in that spot.
Good observation.
These things aren't accidents. So
right.
bear that in mind as well.
Right. Yeah. Right. There's manipulation going on. There's a reason behind they're doing that. And then there's a conspiracy behind the manipulation. So it's all very interesting. But Mike, I wanted to back up a second and comment on the Fed thing, because it kind of ties into the dollar too. So let's say the Fed raises, another, maybe one more time or two, I don't know, or no more times. But from history, you go back to the 1950s and you average all this out. The average time from the last Fed rate hike to the first Fed rate cut is only 5 months.
Wow.
On average from the 1950s, 5 months, that's it. So let's say they do raise rates one more time. That'd be what, the May or June meeting? I forget when the next one is.
It's already been a year now, right? They started March of last year.
No, from the last Fed rate hike. Not when they started, but the last one. Okay. So let's say they raise next month. On average, 5 months later, they could lower rates. That's what the average has been. If you average them all out. From
so once it peaks, the top is 5 months long, and then
That means they could actually be lowering rates by the end of the year. Imagine that.
And they very well could be, because they're probably going to break something. If they continue this, it has to break something in the economy, because the entire financial system runs on these short-term bills and notes. The U.S. Treasury bills and notes are what's in the banking sector, and this is constantly being traded, and with the exchange rates changing so quickly. Right. Thanks, Dan.
Yeah, that was a good one from Peter. But you know what, Mike? They're already kind of slowly breaking something. They're already pulling the rubber band further and further, and it's going to break soon. Just from what you pointed out earlier, the interest rate costs. I mean, that's just one example of something that could really break the economy. That's completely unsustainable. The record pace it's going, and obviously it implies more QE too.
Yeah, one of the things I showed I've shown it in one of these videos, and I showed it in my Wealthion presentation, was I reviewed the crisis of 2008 and how it started. It started out as 2007 with a bank failure, and then 5 months later, there was the Northern Rock bank runs in England, and then 6 months later, there was IndyMac / Countrywide. And then just 3 months after that, there was the nationalization of Fannie Mae and Freddie Mac. And a couple days after that was Lehman. And a couple days after that, one day after that, was the bailout of AIG. So it starts off as these big cracks developing, and then the whole thing crumbles at once.
Right. There's a domino effect going on, right?
Yeah, right. Yes. This is exactly what we're talking about. So, in the book, you were the person that came up with all the data on the miners and how limited that we used to strike these 50 million ounces every decade. There was at least one 50 million ounce discovery, and then the number of miners and mining schools. So tell us about how limited the future supply of gold could be because of all of these factors.
Yeah, it's a great point. Technology increases, so that improves recoveries and things. The higher gold price incentivizes more, but what you have offsetting that is greater than that is that you're not finding these giant deposits anymore. They really aren't. They're finding them in increasingly risky political jurisdictions. the grades of them are not as good. Overall grades, global grades of gold are falling. Some of that's due to high grading, but the deposits they're finding aren't quite as rich. So technology really has to improve to make these things, economic.
Yeah. I believe you
It's
said that every decade they used to find like 2 or more 50 million ounce deposits. And since the beginning of this century, we've been lucky to find a 15 million ounce deposit, right?
right. There's been no 50. There's not even close to that. So,
Right.
these
So
big giant deposits, they're pretty much in
smaller
decline.
and smaller finds that eventually get developed into mines in the future. These are discoveries you're talking about. And then tell us about the engineers, the hard rock miners that know the geologists. What's happening with the
Yeah, that's a point that
geology?
a lot of people aren't really looking at it, and there's a lot of detail in your book about it. But basically,
Well,
a
based on
lot,
stuff you wrote for me. So
yeah,
that's basically that portion on mining and mine supply and
yeah,
geologists. I just want everybody to know that that's information I got from you, that you're my expert on that. So
yeah. What a lot of people aren't aware of is that a lot of geologists and executives, mine builders, mine finders, those kinds of people. Uh, Most of them are, let's say, my age and your age, so
yes,
they're
and they
they're
want to
older,
retire, right?
right? And it takes a while to build up your career, and I understand all that, but there's not a lot of young people coming behind them to fill that gap. Um, Enrollments in mining engineering schools are way down. The number of students attending, the number of professors teaching it is actually in decline. So there's a lot of factors like that that are going to keep that industry from being able to meet the demand that they need to. So that's going to impact, gold as well. So
Yeah, I believe you said, I'm trying to look it up here. I shouldn't be doing this live, but what was the percentage of engineering graduates that were actually geology? It was
Oh, I
incredibly
forget
low.
off the top of my head, but it was dramatically lower.
Yeah, it
And
was
this is information right from government statistics. They compile all this stuff, so it's right from them. They
yeah,
tally all these numbers and report on them.
yeah.
So
So this is
it's
U.S.
not something
government
I'm
numbers.
projecting.
Yeah, it was that's the discoveries. Um,
And yet you go into, why would someone go into mining when it's all, dirty and all that, when you can go into some sexy new startup and just go there, right? So there's
right.
not a lot of new students coming into the industry as well.
Out of
So
all of the engineering degrees that were issued in 2020, uh, there were only 0.16% was mining engineers.
for
0.16. And
for
so,
mining, right.
so
Yeah,
all of
everybody's
the
going into
geologists
oil and
yeah,
yeah.
all of the
Yeah.
geologists that know what they're doing are right at the retirement age and they want to retire. They're in their 60s and 70s, and some of them are even in their 80s, still out
Yeah,
there doing
that's
their
true.
job.
That's
But
true.
they're either going to retire or die doing the job, one or the other.
Right.
Uh, and there's nobody there to replace them. So we haven't found the deposits that we need. There's nobody left. There's nobody new coming into the field to find the deposits. And if the deposit is found, there's nobody in the field that knows how to get down there. Because you've got to, when you're prospecting, you've got to drill and prove out a claim, and those results are all done by geologists, and where to drill is the geologist is deciding all of this, right? And
Oh yeah. Yeah.
yeah. And then um, and
And
then there's engineering involved. Like, I didn't know that mines have if it's an underground mine, there's an electrical engineer whose specialty is mines.
providing power to the underground deposit. That's right. Yeah.
every
And,
every every aspect of mining is a specialty engineering problem, and there's nobody training these people. So when they all retire, the whole mining industry is in for a supply-demand shock just when everybody wants it. And I think that's what's coming up here.
Awesome. Right. That's just another factor that's going to impact, gold and gold demand and the gold price. So, and a lot of people aren't aware of that. So I think the book is going to be eye-opening for some people.
Yeah. So go to Jeff's site, go to thegoldadvisor.com and get his book, Pay Dirt.
All right. We're going to get into some questions as of people sort of hanging out to ask a few things. There's one about CBDCs here. I'll just bring this up. And so there are rumors that central banks around the world are issuing CBDCs, which stands for Criminal Bureaucrat Digital Control, or central bank digital currency, and trying to punish those who have real property, such as gold and silver. What do you think about this?
I think that this does, I don't know if they're actively punishing anybody that has gold and silver as yet, but they're going to punish us for any activity they don't like. CBDCs, the section in my book, I think I call it an evil beyond all evil. This is just the most horrible thing. And then the Fed is introducing Fed Now, which is a digital wallet with instant settlement, but it's not CBDCs. It's just digits. It's dollars. But once you get on that system, it's really easy to just switch the whole thing over to CBDC. And they're claiming all of these benefits, instant settlement. You don't have to wait for the bank to do it. All of the, instant party to party or party to business settlement, or bank to bank or whatever. And so it's just all a smokescreen as getting you onboarded into the evil beyond all evil.
Yeah, okay. I did call it evil as well, Mike, in an interview I did. And the evil part of it is that if you don't do something they like, or do something you're not supposed to do, you don't pay all your taxes in their opinion. There's so many reasons they could cut you off, or maybe your social credit score isn't high enough. Your carbon credit thing is.
Maybe you're drinking too much Starbucks, Mr. Jeff.
Yeah. Too much Starbucks or too much red wine. I one of the two. But,
maybe.
Yeah, I mean, there's lots of reasons they could use to, limit your activity, control your activity, reduce your availability of funds. It's a.
Well, if you're not spending enough, they can just slap a negative interest rate on your bank account. If you notice 10% of your funds disappearing every year, you're going to spend it before they take it all. And so they can stimulate the economy by charging you so that you get rid of your cash.
Right.
And, velocity picks up and the economy seems to get.
And here's another thing. I went to a restaurant once, and I'll leave the place nameless, but they added this extra fee on it. And I've been to this restaurant a number of times. They added this extra fee. It just showed up, and it was, no one informed me of it. No one told me about it. I wasn't unaware of it. It wasn't advertised. It just showed up. And so what they'll do is the same thing in your bank account.
Yeah.
This new fee will just be taken automatically out of your bank account.
What was the fee for? Did they call it a service fee, or what kind of fee was it?
I think it was for some benefits program for the employees or something. I don't know. And it's not that I don't want employees to have benefits, but they just added it on,
This is part of all of the nightmare tangled web of all of these laws and tax breaks. Did you know that your server at a restaurant is on a special minimum wage that's like 1/3 of regular minimum wage? They survive based on their tips are what they survive on. The actual, the government has made it so that they have to have all of these tips to be able to survive. There's no way to survive on the wage that they're.
Hey, Mike, here's a question I was asked, and I'd like your opinion. Hey, we own gold to be outside of the financial system, but when we go to sell our gold, if CBDCs are in place, our proceeds are going to be priced right back in CBDCs, so we're right back in the system. So why should I own gold?
True.
So I had my answer to that, but I'm curious how you would answer.
Well, yes, and if that's the only alternative, then what you do is you sell for the CBDCs and you buy something else. Real estate, high yield, a high dividend stock, something that cash flows right away. You use this next big up leg on gold and silver as a capital gain play.
To get out of the system. Yeah, I like it.
I don't really care about gold and silver. What I care about is morality and honesty. And we live in this deeply, this false, the whole monetary system is a fraud, a Ponzi scheme, a pyramid scheme, and it's all designed to benefit the few at the top at the expense of the many. It would be absolutely impossible for us to have the debt that we've got if we had been on an honest monetary system. People keep on talking about the levels of debt to GDP and all that stuff, and how we can, make the banking sector more stable. And nobody is asking the question, is this whole monetary system that we've got, and this system of banking, is this moral or is it completely wrong? Should we be doing this? How did the US get $31 trillion in debt? How is the world, Hong Kong, Singapore, and I can't remember the third country, but in the book, there's 3 countries that are over 6 years of debt to GDP. We're at 3.5 years debt to GDP. So Japan, Hong Kong, and Singapore are over 6 years of debt to GDP. So everything that they produce for an entire year, they owe 6 years worth of all the goods and services that they produce back to somebody. And nobody is asking to whom? Who had these trillions upon trillions upon trillions of wealth that they could loan us? The answer is nobody had that. It's the fraudulent banking system. To whom are the people that we granted the power of counterfeiting currency into existence and made that legal? And so they get to ride at the expense of all of the rest of us. They get to ride for free. And what they're basically doing is stealing wealth, the amount of time that we work. They're stealing wealth from us every second of every day. And we just keep on buying into this thing. This year, the politicians have scheduled in the United States to spend $1.4 trillion more than our income this year, but they're planning on the income always going up, which they always do. And then I've also shown in several videos, and it was in my book in the 2015 update of my first book, the financialization of government. Up until the year 2000, tax revenues had nothing to do with the stock market. But ever since the crash of the NASDAQ, whenever the stock market goes down, so do tax revenues.
Yeah.
And so they are planning this giant income. They always just extrapolate. However the tax revenues have been going, they extrapolate that infinitely out into the future, and then they base their spending on that. So this $1.4 trillion deficit is probably going to end up more like 2.5, 3.5 trillion. Mike, you don't think the Fed or the Treasury can confiscate our metals at Brinks? Well, anytime somebody uses the word confiscate, that's usually somebody trying to sell you a collector coin, something that's overpriced, where they can make a lot of profit on it. The US government never confiscated gold back in the 30s. They nationalized it. They requested that you go into any branch of the Federal Reserve System, and they bought it from you at the current market rate for gold. If they do nationalize gold again and make it illegal for Americans to own gold, which I used to think wasn't likely, but I've got this motto. When I was a little kid, I had a swimming pool, and a friend came over that didn't know how to swim. And at the minute that his feet could not touch the surface, he pushed me underwater and was holding me underwater so that he could breathe. And I came within seconds of dying. And so my motto is never swim near a drowning man. And the US and the Federal Reserve will be drowning at one point. And so it is possible that they could nationalize gold one day. Will they do it at $2,500 an ounce, $4,000 an ounce, $5,000 an ounce, $10,000 an ounce? I don't know. But at that point, it's best to not become a criminal. Sell it to them, which will be what they will be requesting you to do. So they're going to lock it with what they would probably do. If the free market price of gold is soaring and it's at $7,000 an ounce, they will make $8,000 or $10,000 the price of gold, and they will buy it from everyone. And then we will be back on some sort of gold standard, probably a fraudulent one again. This is the reason I say gold standard. Gold is great, but gold standards suck. Gold standards have always been fractional reserve schemes that are just a bunch of voodoo, and they're going to give you promises to pay gold. And so that's my answer to that question. You got anything to add to that, Jeff?
I would just say, gold's not part of the monetary system today like it was back then. And that's a good distinction between nationalizing and confiscating.
It's not money. It's an investment. Now we've got currency.
Right. I think it would have to be priced much higher for them to actually want to confiscate it, because even at a much higher gold price, it's not going to make much of a dent in the debt, for them to use to pay debt.
Well, if $5 exist outside the United States and the U.S. suddenly declared gold illegal and told citizens that they have to turn it all over again and they'll buy it from them, even if they're buying it from them, what's going to happen to the dollar when the rest of the world hears the news that the U.S. has just made gold illegal? I believe that every trading house all across the world will get on the computers and the phone instantly and say, dump all of our dollars and buy gold. And what you'll see is gold's price soar and the dollar die. So it's their best interest to say, let me see.
Who cares? Someone saying, who cares if they make it illegal? They won't know, because a lot of people own gold privately, which is one of the very few things that you can hold outside the system with no one else knowing about it.
Yes, and if you make small purchases with it, you could get by without ending up in jail. I still think stay on the right side of the law. I don't encourage anybody to go against whatever the law is. I mean, they don't know that if you try to buy a house or a car or if suddenly you're able to buy a whole bunch of high dividend yield stocks, if suddenly a whole bunch of investments spring out of nowhere, they're going to want to know where that came from. Did you sell your gold to somebody for cash? In small increments, you could probably get by with it, but I don't encourage people to try to skirt the law in any sense. I'm extremely high profile because of my profession. And so for me, especially, I mean, I have to be very, very careful with taxation and with the law when it comes to gold and silver.
So there was one other question that came in, which I can't find, but it was, which episode of Hidden Secrets of Money should people watch? Which one's more pertinent today as to what's going on with the Fed, these rate hikes, bank failures?
Wow. Because there have been several of them, but episodes 1, difference between currency and money, episode 4, how currency is created. However, there is a point in there. There's part of it is wrong, and we are not able to put up a banner anymore saying, correction, this section is wrong. But the reason it's wrong is because every textbook was lying to us. Even the Bundesbank, their museum, had exactly my definition of, and Milton Friedman thought that this was correct too. This definition of fractional reserve lending, where you give them $100, they keep 10 in your account and loan out 90. And then if that person deposits in a different bank, that happens again, and $10 can create 1,000. That is wrong. Banks do not lend anything that exists. When you give them $100, you're loaning it to them. They put it on their books basically as a loan. It's a liability that they owe you back. And then they'll invest it in treasury bonds or mortgage-backed securities. And then when they make a loan, that's based on the collateral you bring in. You bring in a house, you say, I want to borrow $1 million to buy this house. They look at the house, they go, oh, that's worth a little more than $1 million. So yes, that's a good loan. They look at you to see if your credit, if you're good at paying things back. And then they imagine $1 million of new currency and they type it into your checking account. So it's all imaginary.
So the good news is it's worse.
Huh?
The good news is it's worse than what we were saying.
Right. So that portion in that episode is incorrect. So just know that we're trying to figure out a way to correct that without losing 10 million views, because that's my most popular video. We don't want to lose 10 million views, but we would like to make a correction. We'll make a correction.
We're going to put a link up. So a link will show up in those info cards, and then you can visit a site, and then you can watch the new section of it, which will be like 20 seconds long. But basically, it'll be just what Mike said. It's worse than what we were showing in the video.
Yeah.
And
I think it's episode 7, Mike, where I like episode 7 a lot, because that's kind of the fallout of what you're talking about there.
I agree. Episode 7 is the one that people want to watch.
That's the one that is, that's the one is what is happening today.
I think that's the one that has Trump on the front, Dan. I was trying to find it the other day.
It's got Bernanke and Yellen investing in gold.
Oh, okay.
The one with the currency bombers on it, and it's got a big number 7, just in case you get lost.
But 5, I'm also extremely proud of the job that everybody did on that. And then 8, 9, and cryptocurrencies are potentially another safe haven. We've never seen them in an extreme crisis yet, so we don't know exactly what they're going to do.
Done pretty good the last couple of weeks when you
did the
first time that they've sort of been through this, and they But who knows?
You want to know how they're constructed and what they are, how they work. That's probably the best video on the internet for that. But these are beautiful masterpieces by Dan, Aiden, and Lincoln. Aiden and Lincoln are the animators, and they are worth putting on a big screen. They're like an hour long. Put them on a big screen, open a bottle of wine, and make a bowl of popcorn. These are great. Thanks to the animation team. And then the same thing goes for 9 and 10. As far as production quality goes, I think those are masterpieces. I really think the video team, Dan, Aiden, and Lincoln, did a phenomenal job.
Thank you, but you're the one who you're the one who makes it all, Mike. So
I say the words, and then these beautiful
they make right. This begs the question, Mike. When's the next Hidden Secrets of Money? I'm sure people are wondering that.
So somewhere it says he still watches Secrets of Money all over again at least once a year. I thank you very much. And then I'm sure that you also recommend it to other people. So if anybody that's watched these could recommend them to other people, that really helps too. And we're going to try. We've got some videos coming up very shortly that are these big animated things that are going to be long-lived. It's like these videos that we do weekly, this is like sticking something in a 200-mile-an-hour wind and it's gone. That's the internet. The book, Hidden Secrets of Money, these things persist year after year after year, and they continue getting views. And I thank everybody out there that helps us with that by recommending them to their friends.
I think I know what you're talking about, what's coming, and I've seen a preview of that. And if it's that, it's going to be fantastic. I've never seen, I won't give anything away, but I've never seen the system described that way before, Mike. It's awesome. I can't wait.
That's the big one that's coming, but there's another one that's on gold, and there's something special, and then what was the other one, Dan? We've got two that are,
well, there's one called something, working title is Something Special, and that's actually showing people how gold is actually formed, because the science, science has never settled, but the science on this one has changed about 5 years ago. It was in episode 1, we mentioned how gold is formed when a supernova explodes, and that's where you get the heavy elements and everything. But it actually turns out, once again, it's even better. It's when there's two that actually go into rotation around each other, and
two neutrons
at a ridiculous rate into each other, and then they create what's called a kilonova, and that is the rarest of rare things to happen, and that's what creates gold and a lot of the heavier elements, and that's what's responsible for everything. So, that is the universe's version of Bitcoin mining, is supernovas running into each other and
These
colliding.
things, I just need to let everybody know that some of these things take years to produce. Episode 4 was something that took, I don't know, a year and a half or 2 years to create. And we're working on several other videos. And so this one has been something that we've worked on, and then something else becomes more important. You come back to it, and it's been years in production. And then there's another one.
We keep interrupting.
I can verify that
with different projects. We actually had the new video series on pretty well on the way. We've animated 2 of the 3 episodes. They do need to be refined, but
for the big one you're talking about, yeah, I've got something I've been working on for a decade coming out in 3 parts.
Yeah, wow! I can't wait to see the final.
And
it's
then
not about gold and silver. This is about economics, and it's fundamental
right
economic thinking.
But it ties into ultimately why gold is real money too.
Yes, it does. Yeah.
But yeah, then we got the feeling that something was going to be breaking in the markets, and it was best to get Mike's book out. So we all went nuts on getting this book over the line, and we've finally done that. So now we're just doing a pivot, so to speak, back to the bigger projects, which are just as important as the book, but they probably
well, the book is more
better
urgent.
online. Yeah, this
the book is more urgent. These videos are much more important, actually, than the book.
Right in the big. Well, I can personally attest that it takes a long time to produce these things. After writing a book, it took off and on about 2.5 years. And by the way, for those who don't know, it was Dan Rubach who pushed me to do this, and it was also Dan who came up with the title of the book. So I'm very grateful for that. He's in the acknowledgement. So
Excellent.
Thank you, Dan.
Thank you, Jeff. It's a good book. It's a great book.
Want to let everybody know too that Jeff was a big contributor to this. So
yeah, that was fun. That was
cool. So, I've got one more question here, Mike. How can someone from overseas become a goldsilver.com insider? I know we used to be able to do it. I'm not sure what the current system is. So what can they do?
I believe all you have to do is open up a storage account, and it takes 10 ounces of gold or 5 ounces of silver, and you become an insider. And I'm currently back testing 23 different indicators, looking for the best ones that flash buy signals when it's time. Because a few of them that I tripped over, oh man, some of them can indicate the month, and then another one indicates the week, and another one can indicate the day of Met, but it won't be exactly the same as last time. So there's got to be, these things have to be used in conjunction with, like, the Dow gold ratio, the gold real estate ratio, the gold silver ratio, the M2 currency supply gold ratio, all of these different indicators. You need a fundamental set of indicators, a set of indicators that flash this sell signal with a confirming set of indicators. And so I'm trying to put that together right now. Hopefully in the future, we have something called the Insider's Dashboard. And we'll see how long that takes. But I've actually been working on this for years, but it gets put on the back burner when we're pretty certain that the day is not getting close when we need to develop the strategy for sales. But what I'm planning is trying to sell 20% chunks, 20%, and then 20% of the remainder, 20% of the remainder. So you always have something remaining, and trying to catch the peak of this and sell around it in chunks.
We'll just take a couple.
That'll be.
There's one here for
go
you.
Ahead. Sorry.
Answer that. I'll put this up on the screen, and you can go into this when you're ready, Jeff. So
some maybe looking at, will the source start being grabbed up by the majors? Absolutely. I've talked about this in other places, and I do think M&A is going to pick up in the industry. And I'm not the only one saying that, by the way. A lot of other analysts, newsletter writers are saying the same thing. It kind of has to. So, Agnico Eagle is one of the most well-respected companies in the business. Well, let's say they discover a 2 million ounce deposit on their property. Well, that's good, right? No, because they produced 3.1 million ounces the year before. It doesn't even replace what they have, what they produced, what they lost, much less, growth. So there's going to have to be more M&A in the sector. A lot of people are expecting this. For the explorers, they're going to have something of value. There's going to be a reason why either a small junior or a mid-tier or a major would want to pick it up. Some of the majors, I will tell you, are waiting until the asset is a little more developed and closer to production. So that would be a hindrance against a explorer. There are exceptions to that, of course, but with explorers, you're investing there not because of potential M&A takeout, but because of what the company may find. So, but absolutely, to answer your question, M&A is going to pick up.
Yeah, M&As are basically if you've got a junior or an explorer and it gets bought out by a major, you just got invested in that major mining company's stock at an extreme discount, pennies on the dollar sometimes, right? You end up an explorer that you bought gets acquired by, say, Newmont,
right?
In that, you'll end up with some Newmont stock at a price where you practically paid nothing for this major sound producer that you know.
Yeah, and then the question is, do you want to hold Newmont or do you want to sell it and buy 10 other explorers? So
sure.
And sometimes the settlement is for cash, not for shares. So when sometimes it's a mix. So it depends on how the purchase actually occurs. But it's going to be an exciting time. I think it's going to be very exciting over the next couple of years.
Yes.
Especially the junior explorer arena.
Okay, here's a question. Does anyone have concerns that the government will backdoor restrict crypto access by shutting down the exchanges so it couldn't be liquidated? The SEC is coming after Coinbase now with a Wells notice. There's been a lot of stuff happening with Coinbase and I mean, these banks that just had the problems were all crypto banks. And, there's a case to be made to say that that's a targeted attack on this actual.
Yes, industry. And it comes right on the heels of what was the guy's name with where the exchange went under and
Sam Bankman-Fried.
Yes, right.
Bankman.
Right. So there is a Chris Martenson video that I would suggest that everybody watch on that. The tie-in with the government that family had, it almost looks like this was something that was done on purpose, that he was basically a sacrificial lamb to really put a dent in the whole crypto space. Then we have these bank things happening. And that's the reason that I think anybody that has crypto should have both gold and crypto, because they want to get us into CBDCs. All they need to do is have a couple of more of these disasters in the crypto space come out with CBDC, which they're onboarding everybody right now through this FedNow payment system that isn't CBDC, but it's digits in it's in a digital wallet, and so you've got it in your cell phone. That's an onboarding for just suddenly pulling the rug out from everybody, from under everybody. Suddenly, everything in your FedNow account is CBDC. Instead of, one day you wake up and you've been converted. You're in your own imprisonment. Your own. You've bought your way into your own enslavement. And
Mike, we're coming up on an hour here, so I'm going to bring up one more question, and then we'll finish with a meme and call it a night. I'd like to ask everyone to click the Overlord pleasing thumbs up and the subscribe buttons and the bell and all that stuff.
Yeah, that's something I never do. I'm not good at asking for the.
We got to be digital beggars, but we got to throw logs on the fire of that algorithm whenever we can. Unfortunately, there'll be hopefully there'll be a day in the not too distant future where things like YouTube, Twitter, all this stuff is running on something completely decentralized, where people can see how it works and there's no one in control, where the market of ideas works and good stuff rises to the top and crappy things float back down to the bottom of the ocean where they belong. And anyway, I'm digressing. I'm a producer, not a commentator. Okay, where was it? I think it was this one. Mike, do you still believe that the final blow on the dollar is going to be deflation, or have your views shifted towards hyperinflation? Well, actually, well, I mean,
well, if you look at what has happened to right now, we're in what I used to call indeflation. It's inflation and deflation happening at the same time. The stock markets, people have the wrong concept of the words inflation and deflation. Inflation used to be an expansion of the currency supply, and that's what everybody called inflation. But then the government wanted to get people off that. The Federal Reserve wanted to get people off that. They started measuring retail prices of certain goods and services, and it's like misdirecting people. When a magician wants to do a trick, he does misdirection, so you don't see what's actually going on. By doing that, people are paying attention to the price of milk and beef and gasoline. Well, in core CPI, you don't even pay attention to gasoline, but my measurement of inflation, I called cup inflation, CUPP. It's currency units per person. It's really the only thing that counts, because during that whole period where the government was claiming we couldn't reach 2%, the Bureau of Labor Statistics was claiming we were having trouble reaching 2% inflation when Ben Bernanke was trying to target this on the CPI. Look at the inflation that happened in the stock markets and in savings accounts and in real estate. It was huge. Cup inflation is based on the premise that every dollar created must go somewhere, period. It has to end up in somebody's account or invested in real estate or stocks or something. And it goes back to watching the inflation of the currency supply. So it's the currency supply divided by the population. It's that simple. The final blow will be deflation. Take a look at what is happening right now. The M2 currency supply is shrinking. The peak in the stock market was on the last day of 2021. The peak in real estate has rolled over and is collapsing. Yes, some retail goods are still going up, but when the Fed does break things, you're going to see a sudden deflation in retail prices when they break the economy and velocity slows down, especially with quantity shrinking. If quantity is shrinking and velocity slows down, you're going to see this sudden plunge in retail prices, and then everybody will feel the deflation that is already going on. Because if the currency supply is deflating and you're seeing it reflected in asset prices, then there is deflation. But it's happening during this period that I used to talk about a lot called indeflation. So there's certain goods and services that lag, certain ones that run, like when the Fed buys something and created QE, they have to buy a financial asset. They can't go and buy gasoline and groceries. They have to buy U.S. treasuries or mortgage-backed securities. It has to be something government guaranteed. And when they do that, the funds of these dollars that they create go directly into the financial sector. So it pumps up the stock market and the bond market. And that was what inflated during this period of time. And then if the Fed wants to stimulate and they keep interest rates low, what does that affect? It affects real estate. So what we saw was inflation in those sectors, but no inflation in the retail sector, because all of the trillions upon trillions of dollars they were creating weren't going to buy groceries and gasoline until we started sending parts of those trillions out directly as checks to consumers. That lit the fuse of retail inflation. And so that's my answer to that. We are at 1 hour. What do you want to do, Dan?
Yeah, there's just one question which popped up, which we can answer very quickly, and it is something that other people can benefit from. And then I will throw up a meme.
Before we go to that, after the deflation, they are going to panic and they will inflate the currency supply again, and it may shift toward something like hyperinflation or even hyperinflation. But if we're trapped in digital, if we're trapped in a central bank digital currency, then they can keep you in it much longer than people would normally abandon the local currency.
Yeah, and episode 6 sort of deals with that roller coaster. But when we made that, there was no inkling of us being in a digital prison.
Yes. Yeah. We made episode 9 of Hidden Secrets of Money. That was when we couldn't achieve inflation. It was all about inflation and price controls.
Yeah. Okay, so last one. I bought both Mike's books. What other book would you suggest us to read? And the good news there is that we made a video, I think it was 11 or 12 years ago, where Mike actually, I was at Mike's house, and we had that question so often that we actually filmed Mike going through his bookshelf, and it was awesome. We had to split it into 2 videos because back then YouTube, I think the time limit on YouTube was 15 minutes. It might have been 10. I can't remember. But yeah, there's 2 books where Mike will take you through his bookshelf. You need to search for, I think it's, if you search for Mike's name and reading list, and it'll show up as 2 separate videos.
The other one that I would recommend today is Larkin Rose's The Most Dangerous Superstition. It's a great book.
Huh. I've not read that.
It's one of the best books I've read. I would recommend it to everybody.
I'll check it out.
It doesn't take long to read either.
If you like freedom and you sort of lean towards the libertarian ideal of, leave me alone and I'll leave you alone, and being self-responsible. If you're a self-responsible person and you're not willing to delegate all of the things that you should be responsible for yourself in life, most people want to vote their rights away, vote to have somebody else make their decisions. That'll be safe. If you're not one of those people, then you will like this book. If you like freedom and liberty and self-responsibility.
Good to know. Thank you, Mike.
Just putting his name up on the screen there.
Yes. Larkin Rose, Dangerous Superstition.
Okay, I am going to find our final meme, and then we're done. Sorry, I'm a bit slow doing this. I'm turning into
we're all learning this new program here for the live streaming. So
I'll get there.
Yeah.
Here we go. I found it. Okay, so here is our meme for today. Can you read that, Mike?
Yeah, just barely.
It is a bit. It's pretty low read
for me because I'm. Yeah.
Okay. The guy in a hedge fund, and his hedge fund specializes in highly complex derivatives and exotic financial instruments for discriminating investors. And he's on the phone just yelling, "Buy gold."
That's the one thing I love about gold is it's so simple. You invest in stocks and you get all this paperwork, voting and all this stuff. You invest in apartment buildings and there's trouble that comes along with that. Gold, you just buy it and you own it. Bam, you're done.
Right. Hey, did you guys see the news today from Credit Suisse that, what's been happening with them? They're imploding.
Yeah.
The company's in jeopardy.
But
2 of their analysts, their strategists, just came out and said they recommend buying gold and that the gold price is probably going to new record highs this year. I thought, how ironic is that coming from Credit Suisse of all places?
Debit Suisse.
Okay.
Right.
So we're signing off here.
Thanks, everyone. Hit the like button, subscribe, do all the digital stuff, and we'll see you later, Mike. Bye, Jeff.
Thanks, Jeff.
Great to see you, Mike and Dan. Thanks.
Thanks for watching, but this is by no means the whole story. If you want the full story, including my free online-only chapters and companion videos, there's a wealth of information at ggsr21.com. Thanks.